Well, hello. Hopefully everyone can hear us okay. Good afternoon, everyone, and welcome. My name is Fred Tako, and I'm the Executive Director of the San Diego County Lodging Association, and I'd like to thank you for joining us today for this important webinar. Today's session comes at a crucial moment when San Diego's hospitality community is at a crossroads. As we all know, our industry is bracing for an unprecedented convergence of pressures from rising operational costs to slower travel forecasts. And for those that are in the city of San Diego, the future implementation of a $25 per hour minimum wage. For property owners, these factors aren't just operational challenges. They may also influence the assessed value of your hotel and ultimately the amount of property tax you are required to pay. With so much at stake, it's essential that owners and operators understand what tools and options are available to them. That's why we're grateful to have the special conversation with Jordan Marks, the Assessor Recorder of the County of San Diego. Jordan will be helping us navigate one of the most important and often misunderstood mechanisms available to property owners in times of economic change, a property tax assessment appeal. For those that are not familiar with the county, one of the core responsibilities of the Assessor Recorder's Office is overseeing these assessment appeals. This process allows property owners to request a review of their assessed value when economic conditions or market factors significantly impact a property's performance and in turn, value. Historically, major events like the Great Recession and the COVID-19 pandemic have triggered widespread reassessments. And today, new economic realities, including the aforementioned wage mandates, hotels are being assessed, the OTC share of TOT, and broader cost escalations may again qualify certain properties for future tax relief. Jordan is here to help us understand exactly what this means. During today's session, he will walk us through several key areas, such as how to determine whether your property qualifies for a reassessment, what evidence and documentation you need to prepare for an effective appeal, key deadlines and procedural steps that every owner should be aware of, and additional tax relief programs and county resources that may offer support during these challenging periods. This is a valuable and rare opportunity to hear directly from the person responsible for overseeing this process countywide, someone who understands the pressures facing our industry and who has demonstrated a commitment to helping taxpayers navigate them. We encourage you to not only take notes and ask questions, but also to share this information with colleagues and team members who may benefit. The insight from today's conversation could have meaningful financial implications for your properties in the months and years ahead. Now, before we jump into the program, allow me to provide a brief background of Jordan. Jordan Marks, San Diego County's elected Assessor Recorder County Clerk, has been leading the 5th largest jurisdiction in the country since 2022. His mission is simple: put people first with great customer service. Before being elected, Jordan served as the Chief Deputy Assessor and Taxpayer Advocate, personally resolving more than 1,000 taxpayer cases and leading award-winning educational outreach initiatives. Today, as Assessor, he oversees the valuation of all real and personal property, including hotels and other commercial assets. As Recorder, he manages vital records and all real estate-related document recordings. And this third one is my personal favorite. As County Clerk, the local media fittingly has named him the Maestro of Marriages for his leadership of marriage services and ceremonies. Hopefully you have that in your business card. Jordan has championed programs that have delivered over $300 million in property tax savings to homeowners, veterans, seniors, small businesses, and property owners. His innovative outreach has made San Diego the #1 assessor's office in California for disabled veterans, saving veterans more than $30 million a year annually. He also has led the creation of the first free electronic real estate fraud prevention tool, a nationally recognized owner alert service. In 2024, he was honored as the San Diego County Taxpayer Watchdog, and he brings deep professional expertise as both a licensed attorney and a California certified property tax appraiser. Today, Jordan is joined by with his colleagues, Albert Tapia, Division Chief of Commercial Valuation, Martin Arias, Special Assistant Taxpayer Advocate, and Michael Trigueros, Supervising Appraiser. A few housekeeping items before I turn it over to Jordan and his team. Supporting documents for this webinar are available for download. To access them, please look at the top right-hand side of your screen. You will find an icon of a paperclip and a document. Additionally, we will host a question and answer period at the end of the presentation. To submit a question, in the same location where you access the documents, you will find another icon with a question mark inside of a dialog box. Please feel free to go ahead and type your question in any time. And finally, a recording of this webinar will be distributed to all registrants. For SDCLA members, it will be on our website. Now, without further ado, Jordan, the floor is yours.
Thank you so much, Fred. I really appreciate this opportunity and for your leadership, deepening our work together between your San Diego County Assessor Office and the San Diego County Lodging Association. It's important that we partner together to make sure that you're treated as fairly and accurately as possible. I also want to thank quickly Melanie Kern and Marshall Anderson for their help in getting us here today and putting together this wonderful presentation, and especially my good friend, Chair Robert Gleason. Appreciate his leadership at the association and the hard work that the entire board does, making sure that you have a seat at the table and you're not on the menu. So today's about the changing market and the opportunities that we see for you to save on your property taxes, to help you thrive and survive in some cases in San Diego County. And then also I'm going to go over our free fraud fighting tool that can help you. So next slide. Fred did a really great job talking about my background. So I just want you to know you have a professional here and a professional on my team. I got wonderful leadership. Albert's got over 20 years. Mike Trigueros has, over a decade. And then Jeff Olson, my taxpayer advocate team member, former chief deputy assessor, 33 years, and Martin Arias. Together, we bring a wealth of knowledge and information, and we're all here to help you. That's what I want to make sure that you know from the very beginning, and you're going to hear it constantly throughout the presentation. And in the end, if you have a question, if you have a thought, call us. We're here as your partner. Next slide. Quick overview of the office, $90 million budget, 450 staff members, and next slide. The biggest thing that I want you to know about my office is what Fred said. We put people first with great customer service. Everything we do, we track and measure our team members based on great customer service. We have a 98% positive customer service rating. Everything we do in our operations is thought about how do we make it so that way we can put you and the community into a great place to succeed. So that doesn't happen alone. It happens with great team members. First, I want to introduce officially my taxpayer advocate, Martin Arias. We're the only office in the state of California that has an official taxpayer advocate office. There's a team there to ensure fairness, provide education like we have today. And then you're our user. If you give us information back about systemic issues or ways that we can be better serving you, we want to hear that. And then he has the ability and the time afforded to him to go through and help implement that with our team. Also, some people really hate 800 numbers. And I'll be honest, I do too. Nobody likes to sit on an 800 number, but I will tell you, in our office, we measure how quickly our staff picks up the phone. In the height of tax season, we aim to pick up the phone in less than 4 minutes. On average, we pick up the phone in 33 seconds. I want you to feel really comfortable calling my office, but you're going to get our cell phone numbers today and our direct email addresses. This is transparency and access, and that's what we're about for everybody in the community. So there's Martin's cell phone number and email address, and that's provided in the supporting materials that Fred talked about today. Also with us again is Albert Tapia, Division Chief Commercial Valuation, with his phone number and his email address there for you as well. Five offices across the county. You know, sometimes the county's trying to consolidate and say you have to come downtown for everything. I don't believe you should have to come downtown for services. We should be able to serve you in the community. There's 5 locations. Come into any of them. We're there to help you. And my favorite part is saying they all have free parking, by the way. And just something I want to highlight for you, especially as you own your property, having the historical records are extremely important, especially as you're looking about valuation and opportunity and what you're entitled to. We've invested very heavily in a archive, and we've had an archivist team stood up. They're there to help you as you're looking for those records that help you and your business thrive, making sure you're maximizing your full private property rights. We want to make sure that we are putting the technology in place to preserve those records. Many jurisdictions stick your records in the basement next to a puddle of water, which leads to the destruction of those records. We make sure that we are preserving your records and preserving your property value. So just as Fred said, I'm the assessor. I appraise all real and personal property. We have over 1 million parcels, and we do everything from boats, planes, business accounts. And last year we delivered a record high 322 million for homeowners. We're very proud of that number. That also went for housing, charitable organizations, the things that make San Diego great. I'm the recorder as well, the keeper of your life's most important moments. Those are your birth, death, and marriage certificates, not necessarily in that order, and then your real estate recordings. And lastly, I'm the County Clerk Commissioner of Civil Marriages. That's actually my wife and I. We got married here in San Diego just over a decade ago. We issue about 25,000 marriage licenses and perform half those ceremonies on site. I know you as our association partner love the other half that come to your hotels to get their marriage ceremonies. In fact, it was during COVID when we were the only clerk office to stay open in the state of California. It was our hotel partners that provided that unique and intimate, safe place for COVID weddings for couples that had their larger ceremonies put on hold. But don't worry, when the pandemic came to a close, we were there also with additional after-hour services, so that way they can get their licenses and go back to your business and have their wonderful wedding that they always dreamed of. So we've been there as a great partner, but we are an exceptional partner for the hospitality industry, especially through our wedding services. Okay, so to understand how you're going to save money, you have to understand the basics of our property tax system. Prop 13 was passed by you, the voter. It says, I, purchaser of property, agree to pay 1% of that purchase price in a fair and open market transaction, right? You didn't buy it from your uncle below market. And that amount is limited to going up 2% per year. That is the beauty of our property tax system. It's affordable because you can predict what your taxes are going to be and you can budget for it. Can you imagine a government that should be run the same way that you run your businesses? That is the genius of Prop 13. It's simplicity. But after Prop 13 was passed, somebody said, what if my property taxes go down? So on the next slide, you're going to see what is called a Proposition 8. Prop 8 was also passed by you, the voters, and it says that you can get a temporary property tax reduction when the market value, that's what you would sell your property for, drops below your assessed value. That's that Prop 13 locked-in rate. Some of the common changes that we see and reasons why we see Prop 8s in the market is a change in the economy, like we're seeing right now. Physical damage to your property. If you take down the building on your land, we no longer tax you on the building. Depreciation or obsolescence, and removal of property. For some reason, you lose a piece of your property in a land dispute. And then also there's legislative impacts. Minimum wage, we're seeing in the city of San Diego, or downzoning, restrictive use on your properties. Other factors can also include, let's say they open up a trash yard next to your hotel and nobody wants to stay there anymore. Or in some cases, you can point to the Tijuana sewage crisis as for a reason why you can't get occupancy. These are all factors that we can account for that can lead to a temporary property tax reduction. Let me show you a visualization here of what it might look like. In this example, and we're going to use a home because it's a little easier. You bought a home for $450,000 and the market jumped up to $600,000 the next year. Don't worry, thanks to Prop 13 and where you qualified and made your business make sense at that $450,000 level, you don't pay taxes based on $600,000. It's the $450,000 plus 2%. That thick black line is that consistent Prop 13 value. Now you can see a few years later, the market drops into the red below the taxable value, that Prop 13 line. We can reduce it along with the market. So if it dropped 10% one year and went back up 10%, we can drop it 10%. It can go back up 10%. But as you can see in the example here, there's a star. As the market returns, never will it exceed that Prop 13 limitation. So as the value goes up overall, you'll still have your Prop 13 protection. Next slide. So here's some legislative impacts that we saw on the hospitality industry, things that we're going to be looking to account for. One, the city of San Diego passed a minimum wage increase, right, from $19 an hour to $25 an hour. As we see this mandated hourly wage impacting operational costs, if the operational costs exceed the revenue growth and has an impact to your profitability, we can potentially lower your hotel assessed value. Federal policies. We saw as CBRE talked about this, a shifting sentiment sets in. Inbound international visitation has fallen 3.1% year over year in July. Conversely, the outbound international travel volumes increased 6.6%. There's an imbalance, and we know that that can be impacting your profitability and your bottom line. As that happens, we may be able to working on lowering your assessed value to account for those factors. Just want to give you some examples of where we see Prop 8s may be available. Where do I know my assessed value versus my market value? On your property tax bill, it says your total land and improvement value right there on the top right. That is your assessed value. So if you bought your property for $100,000, it's only been going up 2% per year. You didn't make any changes. Even if it's worth $100 million, doesn't matter. We go based on your assessed value. You need to know that number to understand the opportunities that we're going to go into next. All right, this is a key part. We're going to give you a what we see hospitality market overview from our assessor data. Why that's important? We make a lot of assumptions based on the information available to us in the market. But as we build and deepen our relationship, thanks to Fred and Chair Gleason and the team, we want to understand more of what's happening in your market and ensuring that at the end, that information leads to more fair and more accurate assessments. So I want to turn it over now to Albert Tapia. He's going to go over the next slide with our market overview, just so we can show you what we're seeing in the market.
Hello, everyone. My name is Albert Tapia, and I'm the division chief overseeing the commercial division. I also have on the call, I asked Michael Trigueros to join me because he's one of the experts in my office that specializes in hotel valuation. Today, I'm just going to, at a very high level, go over some of the key performance indicators that we're reviewing. These indicators are, or these graphs, this data is coming directly from CoStar. However, we do rely on other publications to keep track of the market. Let's start off with the first one here, occupancy. This graph shows, the significant recovery from the pandemic in 21, 22, and then as you can see, the occupancy rate flattens out around 2023, early 23, and it continues to be fairly stable through 2025. The forecast does show a slight decrease going into 2026, so we're keeping a close eye on occupancy rates. Next slide. Okay, and this is another indicator. So here we have the average daily rate. Again, very similar to the first slide. The recovery from the pandemic in 2023, we're seeing the ADR stabilize, and then the forecast actually shows that it's going to remain stable through 2026. According to the note down there, it stabilized roughly at about $213. And that was for September of 2025. Next slide. Okay, now this is RevPAR. This is a combination of occupancy and the average daily rate. Similar data. It shows the graph, recovering through 21, 22, stabilizing in 23, and then you're seeing some small fluctuations in 24 and 25, but fairly stable. According to CoStar, there's been zero change in the RevPAR, for the trailing 12 months. Next slide. Okay, and this is a real important key performance indicator, and this is cap rates, right? Cap rates have a significant impact on market value. This is the cap rate graph directly from CoStar. It shows that the San Diego market cap rate, and this is for all types of hotel, all classes, has increased from 7.44% to 7.59%, 15 basis points change from a year ago. So we're keeping a close eye on cap rates. Obviously, cap rates, like I mentioned earlier, have a significant impact on market value. The other thing that is interesting about this graph is the forecast. The forecast is showing a significant increase, in 2026. Just looking at the graph itself, it shows roughly anywhere between 30 and 50 basis points change in 2026. Again, we'll keep a close eye on the statistics and make sure that we incorporate this new data into our analysis. Next slide. Construction. So this is another thing, we're responsible to assess all new construction, and so we keep track of all the new developments. And so this graph shows all the construction, all the rooms that are under construction in San Diego County. We saw kind of a significant spike in 22 through 2020, I guess 5, early 25, and that was because 1,600 rooms were being built down in the South Bay area with the Gaylord project. That project was delivered in early 2025, so that's why you see that significant decrease in the rooms under construction. And roughly right now, we're at approximately 1,300 rooms under construction that are going to be completed by 2027. Next slide. These are the 10 projects that are under construction. They're all listed. This is coming directly from CoStar. The largest project there's an image of it to the right, the Meridian downtown. That's a rendering of the tower that's being built. And then we have 2 other projects, this Element in Chula Vista and Element in San Diego, Mission Valley area, to the left. Those are the 2 images. And so this accounts for the 1,300 rooms that are under construction. Next slide. These are the 10 sales in the past 12 months. So these are the hospitality transfers that we identified. This is all information that we gathered from CoStar. And so there's images to the right of the 2 largest sales in the county. So the Residence Inn in San Diego La Jolla sold for $79 million, June of 2025, 288 rooms, $275 per room. And there's an image on the top right. And then the second largest sale in the county was AC Hotel San Diego, $70,485,000. There's an image of that property at the bottom right corner. And so these are the sales, the 10 sales in the last 12 months. Okay, and this slide is important. As Jordan mentioned, some properties may qualify for a Prop 8 reduction. And so looking at the statistics and looking at our internal data, I have identified 182 parcels that have a hospitality designation that are currently under Prop 8 reduction for 2025. And this is actually saving taxpayers approximately $3.5 million in property taxes. So we have identified all the hotel parcels that are designated as hospitality, and 182 of them are under Prop 8 reduction. And I'm going to provide you 2 examples too. So we have 2 examples, and these are real examples here. So we have one hotel that was acquired in 2018. It has a original base value of $21,865,000. The factor base year value, however, for January 1st, 25 is $24,390,000, and the current Prop 8 value for 25 is $20,200,000. There's a difference of 4,190,000.
I'm just going to pause here for a minute and just
Sure.
make sure everybody understands. Factored base year value refers to that Prop 13 value. So it's that base value that you purchased at factored with that 2% increase. So if you hear and see the FBYV or factored base year value, that's your Prop 13 value that we have. Okay.
Yeah, I'll work on those acronyms. I know we're so used to using acronyms here. So yes, and what Jordan just mentioned. So that 2018 base year value is the 21,865, and the index value is 24,390 for 20 as of 1/1/25. So that property owner is saving $41,904 for 2025. The second example is actually a hotel that was purchased before the Great Recession. This was in 2008. The base value was $8,800,000. That's the original base value. And the factor base year value is $11,558,000. The current Prop 8 value for 1/1/25 is $10,500,000, difference of $1,058,000, and so that property owner is saving $10,581 on their property taxes for 1/1/25. So this is just two examples. It doesn't necessarily mean that if you bought property 15 years ago that you may not qualify for Prop 8. It's on a case-by-case basis. So if you feel you're overassessed, go ahead and file. Now I'm going to quickly explain possessory interest properties. A taxable possessory interest is defined as a taxable interest held by a private possessor in publicly owned real property. And some examples of that include hangars at the municipal airports, hotels on ground leases from the Port of San Diego. Those are two examples. So this is a private interest on publicly owned land. Some key facts about the possessory interest.
And I'm just going to pause again here for a moment, Albert. So again, just Albert talked about you can either own your property fee simple, that means you own it, or you're operating on a government piece of land. You've built a hotel with a 99-year lease on the port property. We have to value it differently, but it still gets the Prop 13 protections, and that's what Albert's going to walk you through now.
And that's absolutely right, Jordan. So we still have to establish a base value, Prop 13 base value, for the leasehold interest. However, annually thereafter, the taxable value of the interest is the lesser of the two, right? The factor base year value or the market value. The property interest value is based on the full value of the leasehold interest and potential Prop 8s, right? So because we're valuing the leasehold interest, as that lease declines, there's a possibility that the market value has declined below the factor base year value. So in this scenario, Prop 8, if the remaining term of the leasehold has declined, for example, if the original term of the leasehold was 25 years and the remaining term of the leasehold as of 1/1/26 is 10 years, the fair market value of the leasehold may be substantially lower than the fair market value or the factor base year value.
And just think about that rationally, everybody. If you were to buy a hotel that had a 25-year lease, the value is worth more. If there's 2 years left in the lease isn't worth as much. You're not guaranteed that renewal, right? So these are factors that we account for. And as Albert indicated, usually as you're less than 10 years, we tend to see the value of the leasehold interest drop.
That's absolutely correct. And I provided an example here. So to the right, we have a possessory interest that was acquired in January of 2000. At the time that it was acquired, the leasehold interest had 34 years left. And we reviewed the assessment as of 1/1/25. As of 1/1/25, the leasehold interest, there was only 9 years remaining. So in this situation, the factor base year value from 2000, the original base value was $71,500. The factor base year value is $109 million. However, the 2025 Prop 8 value is only $45 million. So there's a difference of $64 million, and the taxpayer is saving $648,000 in property taxes for the 1/1/25 bill. Next slide. Oh, this is the so Martin Arias will take over from here. He's going to explain the appeals process and in the informal review process.
Excellent. Thank you so much, Albert. And so, like Albert, you know, you're nothing without your team. And so we have Jeff Olson here from my team who really has a lot of institutional knowledge, and we asked him to be a part of the conversation as well. So you may be asking yourself what the difference between an informal appeal and a formal appeal is. But just in general, property tax appeals. So formal process that allows a property owner to challenge their property's assessed value as determined by the local county or city assessor's office. The primary goal is to show an impartial appeals board comprised of 3 members that the property's market value is lower than the current assessment, which can lead to a reduction in property taxes. So filing an informal Prop 8 review, how do you do that? You can, 1, email us at arccprop8@sandiegocounty.ca.gov, or earlier Jordan Marks provided, Assessor Marks provided my email address. You can email me there, and I'm more than happy to provide that. Alternatively, you can find that on our website. And I wanted to just make a quick note that that link goes up on December 1st. Is that correct, Albert? I just want to confirm that the date is accurate.
Yes, that's correct. The forum.
So the appeal process essentially for informal review is December 1st through April 30th. And that link goes live at that point, which if you have any questions, concerns about how to fill that out, again, I'm more than happy to walk you through that process and make sure that you're getting the help that you need. So
is it okay, Martin, if we just pause here for 1 second? An informal Prop 8 review is basically notifying our office, hey, I think something might be up with my property taxes. I think it might be assessed too high. Let me get you more information so that way you can see if you're seeing what I'm seeing. Now you can have a formal agent with you, or you can use the informal process. It's easy and accessible, and it basically helps us do a review to make sure that we are accurate. So that's the important part. And the reason why it opens up in December on our website to April is because then there is a formal appeal process that Martin's going to talk about. And we don't want to confuse folks from missing out on a formal appeal, locking in their rights versus this informal review process. But I will tell you, I told you customer service and putting you first with great customer service is the most important thing that we do. So we have to be accessible to having a great conversation with you. And so Martin's going to show you now what helps us have a better conversation and helps understand the value of your property.
Great. So when you do contact me, you know, we're going to have a conversation about where you think the value is and some of the documentation that you're going to need to include with your filing, with your informal filing, I should say. We're going to need income and expense statements for year 25 and 2 prior years, income and expenses, expense budget for 26, copy of appraisals performed within 2 years of January 1st, 2026, rent roll as of January 1st, 2026 for leased areas, comparable sales of properties that sold no later than March 31st, 2026. So I just want to make sure you guys have this list. Again, if you guys have any questions, concerns, feel free to reach out directly to me. We'll get the conversation started. It's a very informal process, and then we'll have the team begin to digest that.
And I just want to make sure that we're communicating this. You know, we know the association here is made up from your small motel owners to your large mega hotels. Okay. And we know some of you have more resources than others. Don't be afraid to say, here's what I have. And don't think that I don't have this, I can't bring it in and get the help. Okay. These are things that help us, that makes it easier for us to accurately assess your property. But if you're like, I'm just a small person, I don't understand all this, I don't know, it's okay, call us and we'll walk you through it. and you'll get us as much as you can, and we're going to work with that. Okay. So I just want to make sure that this process, there is no formal checklist that you have to have this or this or this. But if you have a rent roll, which all of you should, and we hope you do, that makes it really easier for us to narrow down and get the information. If there were appraisals performed, if you don't have the money, don't go out and spend money on an appraisal. Don't worry about that. Just come to us with what you have, and we're going to work with you to make sure that we get you taken care of. Thanks, Martine.
All right. So we talked about the informal process. Now I want to talk to you about the formal process and how to protect your right. So you can do that in 5 really easy steps. And I really want to note here, which is why we have it in red, that the filing deadline for a formal appeal is on November 30th. That process does not come through the assessor's office. That goes through the clerk of the board of the county supervisors. And so we have no control or bearing on how that process works out. And so I really want to highlight the fact that if you do not get your application in, your assessment appeal application, that is, by November 30th, it is almost impossible for us to be able to help you through that formal appeal process. Now, so let's talk about what the formal appeal process
is it
looks
okay?
like.
Is it okay, Martine? Just to go back to the last slide for a moment. I just want to highlight for everybody here on the call or on the presentation, we're talking about a protective appeal. Why do we use the word protective? Because if you do this filing that Martine's going to show you and lays out, and you think there's something there, by filing your appeal, it does not commit you to this process. It just maintains your protective rights for us to continue the conversation. And that way, if at some point in the conversation, there's a discrepancy on value, this protects your right to have somebody else look at it, the assessment appeals board. So we have no ego in the office. If you think that there's something there, there is no offense to us by filing an appeal. And some people get concerned about that. Oh, I'm going to offend you. I don't want to. No, that's okay. We want you to protect your rights and then allow us the time afterwards to make sure that we're working with you in this process that Martine's going to talk about, that informal meeting that you see here on the slide. So I just want to highlight, we are encouraging you. If today on this call, you're here because you feel the tax bill you just got is too high, file a protective appeal and do it by November 30th. And thanks to Martine leading us through right now, he's going to show you it's easy. It's not cumbersome and there's no cost. In other counties, they charge you to file these appeals. I will not let that happen in San Diego County. You should not be charged for appealing your property taxes. So I want to warn you, in other counties, we're just talking about San Diego today, you may have to pay a fee to have a protective appeal in place. Not in San Diego. We protect your rights. It's free. And again, this is part of our process. It's not an insult to my office or Albert or Mike or the team. It allows us to protect your rights and make sure that we're doing the best by you.
Great. So the assessment appeal applications must be filed again between July 2nd and by November 30th. And I know we're really emphasizing that, and we just want to drill it down to make sure you guys understand that that's the deadline to protect your appeal rights. And so Jordan just mentioned filing the application is free. And where can you get it? You can get it on the clerk of the board's website directly. And I'm going to talk to you about how to do that right now.
Also, if you email Martine and ask him for the application, he'll send it to you.
That's right. That's absolutely right. So you can go directly to their website. That's their website. It's a little complex. You just Google property tax assessment appeals. It's the first page that pops up separately. You email me, I get you the application there pretty quickly. Okay. So we're looking at this. Give me one second. It's like a little delay in this screen here.
That's okay. In the meantime, I'm going to say this, and Martine's going to repeat it. You do not need a professional attorney. You do not need an accountant or a CPA. Everybody here, small business owner to large business owner, should be able to file the protective appeal on their behalf. And this is how accessible it is to make sure that we get it right. Nobody in San Diego County should have to overpay on their property taxes.
Hey, Fred, there's a bit of a delay here on the screen. I click and nothing, it's not going to the, there we go. That's what we're doing here. It's not jump into the next slide. All right, so here we go. So step-by-step guide. So this is what the application looks like. And there's a couple sections here. So if you look at section number 1, that section is going to require you as the property owner's information. That's where you're going to enter your name, your email address, your personal mailing address, etc. And then in section number 2, you are only going to complete this section if you have an agent or an attorney that's going to be representing you. And typically, if you do, they would be the entity that's going to be filling this form out. Likewise, we are happy to help anybody through this process. If you look at section number 3 here, this is where you begin to input the information from your property. So let's see if we can go to the next slide here. It's a little bit of a delay on
In San Diego, we're blessed with a wonderful advocate community. So if you want to hire a taxpayer advocate, a private advocate to look at your case, again, that's on you. No insult to us. We love having professionals to work with, but I don't want anybody to feel that they have to come out of pocket. I can't afford it. At every level, this process is accessible to you.
All right. So for the property identification information, you're going to want to select, in this case, we're talking about hotels and things of that nature. So you would select, no, this is not a single family dwelling. Your assessor parcel number, you should be able to find on your bill directly. So if you have any questions about where you can find that information and you don't have a bill readily available, again, you can reach out to me. I'm happy to provide that information to you. Next is the property type. So again, we're talking about hotels here. In this particular one, you would select commercial/industrial for this. If you're filing an appeal for your personal property and it's a single family home, again, you would select accordingly in this section, okay? Now, down here, this is where it gets a little bit complex. Again, I'm happy to walk you through it, but Jordan earlier talked about the information that's on your bill and how the values are divided up on the bill. And so there's a section there where it'll address the land value. There's also going to be a section there it's going to address your improvements and structures. And I believe you would also receive personal property bills because we're talking about the whole hotel industry. And so those might be separate bills, but again, you can also appeal those bills if you feel that you're being overpriced or overcharged on some of those, or they're not being depreciated appropriately for some reason, right? Maybe you purchased your hotel with furnishings and you haven't filed some of those proper according documents. And so we have to just take a stab at what we believe to be the right value in those instances, even though they may have depreciated over the last 5-10 years. And so we want to make sure that we're helping you appeal that accurately. So that's where you would input this section. This is the values that we have attributed to your properties. Okay. Now in the next section here, this is where you would enter what your opinion of the value should be. And now I'm going to have Albert, Mike, and Jeff cover your ears for a quick second here. If you don't know what that value is, you can just put any amount there. You could put $1. This is to get the application started. This is to get us going in the right direction. Albert, I see you laughing a little bit there. But the aim of this, like I said, is we got to get this in. This is the formal appeal process. we're going to have a more internal conversation, in-depth conversation with you. Albert, Mike, Jeff, the team, they're going to meet with you. I'd love to be a part of the conversation to just get a better understanding of where you believe your value is, where, you know, with the documentation, what we can show to be the correct value, and then we're going to be able to move it forward on that. Okay.
I just want to I want to reiterate with what Martine just said. This is one of the areas where people get tripped up. Do I have to go out and get an appraisal done? I don't know the value. I'm scared. What if I put it down? You are not locked in to the value there. It helps us understand. If you're scared to put a value that you're not sure, like Martine said, put something there, $5, $10, $20, something, so we can just qualify your application through the clerk of the board office and then begin preserving your rights of appeal. You are not held to that number. Now, if you have the number and you're like, we have you at 33 million, but you say, no, it's 30 million, then put the 30 million in land and improvement. If you don't know how much should go in each category, don't worry. Just have two numbers that add up to that total amount. Don't get tripped up on this column. Put something there, and then they'll have to accept your application.
All right. So this is the back side of that page now. This is so there's two pages. On this section here, so you're going to try to see which bill you're appealing. Okay. Now I want to note some pretty important deadlines related to the types of bills. So if you're going to be appealing your regular annual bill, which is the blue bill, that's the bill that Jordan showed at the beginning. That's the one that has a very specific deadline of November 30th, okay? And you would select regular assessment value as of January 1st of the current year. Now, if you've done new construction or there's been a change of ownership, let's say you just purchased your hotel, you're gonna get supplemental bills. Those bills are going to be green. And I wanna note that those have a very specific 60 calendar day deadline from the print date or the mail date. Now, one of the things that I've noticed when working with taxpayers is that you know, the print date is gonna very likely differ from the mail date, and the only way to differentiate that is if you're saving your envelope, because that's the date that the U.S. Post Office is going to, you know, assign on the mailing. And so I want to encourage you to, you know, I'm guilty of it. I get something in the mail, I open it, I look at what's inside, I'm like, wow, this paper's important, and then I throw the envelope away. For your purposes here, it could be the difference between having you know, having the office, the clerk of the board, accept or deny just your assessment appeal. So I want to highlight that for you all. Okay, so now in this next section, you're going to want to identify the reason for your appeal, and that may vary. And so I want to note here that if you had new construction, you're going to want to select new construction, or if we think there was new construction and there wasn't any new construction, you would select option 1 there. Again, this part can be somewhat confusing. I don't want to say typically, I don't want to generalize, but you know, if we're just looking at the valuation here for Prop 8 purposes and we feel like there's been a decline in value, you would select option A. If there's anything else going on, I would say consult us, give us a call. Any of the team members will be able to walk you through which option you would want to select here. That's important, okay? Now, in this next section, you might be asking yourself, what are written findings? Do we need those? I'll tell you, I'm not an attorney, but I've looked at this a couple times, and what I've found and what we found, Jordan, is that, you know, they are only desirable if you plan to appeal to the court system. So you would want basically your entire case to be wrapped up into written findings. Now, I do want to note that those have a fee of $490 per appeal. So if you don't plan on going into the court system, we don't recommend you request those just because of that $490 fee.
The other benefit that I'm just going to add for this, Martine, is many of you get to the appeals board and you want your results that day. hey, I want a decision. What's going on? If you want a decision that day, don't request written findings. If you want a decision that's going to have thoughtful writing that can be then reviewed by the courts, then you need the written findings. It takes more time.
Excellent. And so in this last section here, you're going to be, so let's say bills are sent out in the month of October, and the first installment of those bills is due by December 10th, right? You're going to want to appeal by November 30th. So typically what's going to end up happening is that the appeal process can take up to 2 years, which means that within those 2 years, you would have paid the bill as it was. And so I want to note that if you're making a payment, which you very likely will be making a payment, you will have to designate this claim as a refund. Okay. I'm not sure if you've selected no, if you wouldn't be able to get refunds in the future, but I know, we want to fill this out as accurately as possible. And so selecting yes and claim for refund is helpful there.
And just a reminder, if you don't pay your property tax bill in the meantime, you get hit with a 10% penalty and an 18% interest from the Treasurer Tax Collector's Office. So we always encourage you, pay your property tax bill, and then we'll work through the process and then work on refunds.
Excellent. So in this last section, sorry, this is kind of jumping around here. If you do not have an agent or an attorney, then you will complete this section yourself. If you do have an agent or an attorney, they will likely complete this final section for you. Okay, that's the certification process, etc. So on this next page, this is a supplemental page for those of you who have multiple parcels in one economic unit, so to speak. So let's say you own kind of a corner lot and there are 3 different parcels in that corner lot, but they all operate as one hotel. You're going to want to make this into one appeal, and you'll have to use this form, which you can also find in that on their website directly there in additional forms. On this page, again, you'll see you'll be able to have the opportunity to put a parcel number, the address of the location, and then again, it's going to ask you for the values, the land broken down, which you can find on your bills. And then again, it's going to ask you for your opinion of value on this one. Okay. So again, I want to let you know that your formal appeals have to be postmarked by November 30th. And you would mail those or walk them into the downtown office here, which is the 1600 Pacific Highway, room 402, San Diego, California. So that's the downtown location.
All right. Thank you, Martina. We're going to get through this real quickly so we get to some Q&A. I just want to let you know we have a title theft protection service to alert you if somebody tries to steal the title to your property or your possessory interest. If you look at the next slide, you're going to see it takes 5 minutes or less. You just need your APN, your email address, and your name. And you can put your business name in too. We'll let you know if somebody records a lien against your property as well. So these are really important for business owners. If there's a plumber out there that has a lien out against you and you didn't know and you're trying to refi, this could hurt you. Take advantage of economic opportunities to better your financial situation. So the next slide will show you 5 minutes or less, owner alert, available at sdarcc.gov. And the last slide has my cell phone number, my email address, and we're happy to take questions. And thank you again for this opportunity to show you, 1, to preserve your rights to an appeal, and 2, give us time to help you look at a Prop 8 temporary property tax reduction if it's available to you. And we have seen it in San Diego. It is happening in the market, in particular downtown and some of the residual markets. We're seeing the reductions happening.
Awesome. Awesome. Hey, thank you very much. And as a reminder to the audience, please remember to submit your questions in the dialog box with the question mark. As you were going, we have been fielding questions from the audience, and Assessor Marks and the team have done a great job of already answering a lot of the questions that we have received in our dialog box. But one of the areas where we're getting multiple questions on, and it has to do with new construction or improvements. Now, the first one is, how does San Diego County handle assessments for phased hotel renovations? If we could tackle that one.
Albert's going to take.
Yeah, for the phased hotel renovations, first of all, we have to determine if there's accessible new construction, right? And that's kind of a gray area because new construction that is strictly for repair replacement is not an accessible event. However, new construction that completely changes the use of the space or a major rehabilitation, that could trigger a reassessment. So that's something that, you know, it's on a case-by-case basis, is reviewed by the individual appraisers and they use their judgment to determine if there's accessible new construction. As far as the
Yes.
impact
Don't
on
worry,
revenue,
don't worry about putting new carpets in, okay? If you're replacing
exactly.
the old carpet, you're good.
Yes, yeah, exactly. And as far as the impact on the revenue, right? I think that's probably, I saw another question on that. Yeah, so that will all be incorporated into our income approach analysis. Any revenue loss, that's all part of the analysis. If we determine the market value is less than the factor base rate value, that's when we enroll a temporary prop rate reduction.
And Fred, I'm going to say this. Generally, we're driven by permits. So if you're getting permits for electrical or for other stuff, that drives us to come and look and see what's going on. If you're doing a renovation that's paint and carpet and there's no permit, we're not looking at that and that replacement.
Awesome. Thank you. That was actually the next question, is whether it started on permit issuance, completion, or partial occupancy. So thank you for that.
We increase the approved value based on the value of the property on January 1st of each year. That's called the lien date. So as we're looking at these Prop 8 appeals, we're going to look at the value of that property on January 1st lien date. So that's important. I want to make sure everybody knows that. We're looking at the values based on January 1st of last year for this year's property tax bill. And then if there's a multi-phased, you know, you've put grading down, that's an assessable event. You've added, you know, 20 rooms, partial increase of value. So we'll go along with you on the project and re-look at the value of the project as of January 1st of each year.
Thank you.
Until we get the final permit, and then we'll put a final value.
Got it. Got it. Another question on here. This has to do with assessment appeals. For partial year renovations or closures, how does the county account for reduced operational revenue?
So that's kind of very similar question where we're going to incorporate those losses into our valuation analysis. Typically, you know, we're looking at an investor's holding period, so we'll incorporate those reductions in revenue in the individual income streams.
And I'll say this, Fred, the more we know about how many rooms you've closed down, changes of use, that's helpful to us in getting to that right value and income approach.
Terrific. All right. Well, we are reaching the end of our allotted time, and I'm looking at the dialogue box for the questions. I believe we've covered everything that's been submitted. So to our attendees,
is it okay? I thought I heard one question out there about what documents are required if I change ownership with a hotel in an LLC or partnership. I just want to make sure that we're flagging that for folks. If you're buying a hotel in the corporation, not actually buying just the land in the hotel, but you're buying the LLC that owns it, there's a Board of Equalization Form 100B that's generally required to be filed within 90 days. And so I just want to make sure that as we see this consolidation in the market happening, if you're not buying the title itself and having that transferred to you, but you're buying the entity that has the property inside of it, make sure you're watching out for that California State Board of Equalization filing and that you're doing it within 90 days.
Awesome. Awesome. Well, thank you very much. Well, all right. This was a packed agenda, and you guys moved through a lot of very difficult information. I don't doubt that folks are going to follow up with you in your office on a number of questions. But most importantly, you've availed yourself in such a way where the industry can reach out to you. So thank you very much for that. Thank you. And to our attendees, thank you for joining us today. We hope this session has provided you with valuable insights as well as practical takeaways for your hotel. And once again, thank you to the Honorable Jordan Marks and his team for presenting engaging with our members of the hotel community. As a reminder, a recording of this webinar will be distributed to all registrants and will also be available to SDCLA members on our website. So, hey, thank you again, and until next time.
Thank you, everybody, and thank you, Fred.
Thank you.
Thank you, team. Great job.